Hey, welcome back to the Mining Pod. On today's show, we are joined by Colin Harper and Nico Smid to talk about 2024 year in review. This was actually a mining mafia Twitter Spaces. We're going to start hosting the Bitcoin Stock Show, basically our midweek show on public companies in the space on mining mafia spaces. So if you want to jump in with us live, feel free to do so. Otherwise, keep checking us out here on the Mining Pod feed on RSS, or go check out some of our other stuff on blockspace.media. Okay, let's jump right into the show.
Nico and his co-author, Cindy Feng, put together a great 2024 respective report. Y'all covered a lot of ground, and I just, want to give props to y'all. I used to do these at Luxor, and I know that this is a monumental effort. It takes a lot of time, a lot of coordination, a lot of different moving parts. And just kudos to getting this out so timely as well. It's about 70 plus pages, 83 in all. So
Yeah, it's been quite some work. I did one last year, which was around 50 pages, but now with Cindy collaborating and working on the PubCo part, it became quite elaborative. But yeah, to those that are interested in the report, let not the amount of pages let it not scare you. There's a lot of information in there. You can always zoom into the pages that you're interested in.
Yeah, a lot of ground. Looking at the table of contents here, y'all give a state of the network, which looks like hash rate, blocks mined, network efficiency, geographic trends, mining economics, like hash price, Bitcoin price, network difficulty, transaction fees, ASIC market stuff, and a big section on public mining companies, probably the most germane to our audience here today. Go check out Nico's page for a downloaded report. We'll get it thrown up here too in the bird's nest as well so that people can access it easily. But just to kick it off, Nico, quick question for you, kind of holistically on the report. Was there anything in your research that surprised you the most? And then inversely, was there anything that surprised you the least while you were putting this report together?
Well, there were not a lot of surprises because I write on a weekly basis. So each week I send out newsletters in which I cover mining economics and look at trends and innovations in the space. So no real surprises. But I think if we look back at 2024, what I didn't expect up front was maybe not so much the depth that hash price went. So hash price being the revenue per computing power unit, in this case petahashes per day. So the revenue of the miners went down to historic lows. That wasn't a huge surprise to me, but it's more the length of these lower margins that I didn't anticipate. Looking back to history, let's say. If you compare, for example, the 24 halving year to the 2020 halving year, in 2020, we were back at pre-halving hash price levels at the end of the year, and now, we're still quite far away from that. So I think for miners, the depth, obviously, like the squeeze of the margins has been difficult, but I think that the length of the lower margins is even more challenging.
It's an interesting point about the capitulation that you have in this report, where you look at these hash ribbons, and what you found was that this most recent halving cycle directly afterwards was the longest period of capitulations, except for one, since the data has been going back. And to your point about hash price not reacting or reacting to the upside as quickly as you might have thought, it's interesting with 2024. I feel like Bitcoin's price remained relatively flat until the end of the year when we got a pop above 100K in November and December. But difficulty was just relentlessly increasing throughout the year as these miners plug in these next generation machines. Going back to that capitulation event, do you have any thoughts about whether or not we would have seen that become even longer if it weren't for the runes mania that went on right after the halving? Because that gave a pop to transaction fees for a couple of weeks there.
Yeah, so the runes project really popped the hash price all the way to almost $180 per petahash per day, which wasn't seen in 2 years. So it was really a big spike, but it came falling down also. I think if it wasn't for this spike in transaction fees, then maybe the capitulation would have started earlier, because now the first two difficulty adjustments after the halving were downwards, and it was only am I saying that right? Yeah, it was only the third one that no, the first two one went upwards, sorry, and then the third one went downwards. So where after the previous halving, you would see immediately an effect of hash rate coming offline, difficulty adjusting downwards. Now it came with a delay, let's say. So if it wasn't for the runes and the associated transaction fees with the project, then probably this capitulation would have started earlier.
Yeah, it certainly seems like it. And it was just incredibly well timed for miners, but there was this shock right afterwards, right? Where once those transaction fees went away, then we really started to see capitulation. With regards to the drawdown and hash rate, just to touch on that really quickly, what were your what did you see in regards to hash rate curtailing or the low following the halving with relation to prior halving events?
Yeah, it went in two waves, let's say. First, it dropped quite a bit, and then it recovered all the way back to the pre-halving hash rate levels, and then it dropped again. So the time it took to find that local bottom, let's say, was longer than if you compare it to the previous halving. Also, from the top pre-halving to the bottom post-halving, let's say, it was a drop of 73 exahashes, which is way more than it was in 2020 when hash rate dropped from 120 to 90, so 30 exahashes. So the amount of exahashes that came offline was more than double. But then if you look at the percentage impact, in 2020, it was 25% that came offline, and now it was almost 16%. So there was percentage-wise, the impact was smaller because the network is much bigger, obviously.
Right. And I like this chart that you have in here where you say record-breaking growth, at least in terms of exahashes added. There were 292 exahashes added over 2024, and that represented a 56.7% increase year over year versus 250 exahashes in 2023, which was, in this chart at least, the largest period of growth over the last 6 years at 94.3%, which is pretty incredible. But if we look back to the prior halving year of 2020, we saw 44 exahashes worth of growth for 43.6%. So I think one of the biggest takeaways from this report for me with regards to network growth is even despite the halving, we've just seen some relentless deploying of hash rate with these next generation machines, and particularly from public miners.
Yeah. So
any commentary on that?
Yeah, so if you look at the summer period was quite rough, and throughout the years we've seen quite some drawdowns in hash rate. But if you measure from the 1st of January to the 31st of December, then you see that the network hash rate still grew at a record amount of nominal computing power, right? So it's very impressive that even in a halving year, this amount of exahashes were added to the network.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
%. All right, I want to jump to the next section about geographic trends in mining. And you've got some good commentary here about, some of the growing trends that we've been keeping an eye on, like Ethiopia becoming a leader in Africa. You talk about HPC and AI retrofits, like with Core Scientific, particularly in the US, Russia's regional restrictions, and the legalization of institutional miners in certain regions. But I want to dive into this headline specifically that you have that says regulatory uncertainty in Paraguay drives miners to Argentina and Brazil. Can you expand on this? Because I think this is an interesting tidbit and something that has been underexplored, I think. A lot of people have been beating the drum of Paraguay since, at least 2022, when there were a lot of movements in that region. Obviously, Bitfarms has a huge build out in the area, 200 megawatts worth and I'm going to butcher the name of this, Yugazu, Paraguay. But there
Iguazu.
Yugazu, thank you. But there have been some problems specifically with Andy and with some regulations where the officials are kind of pumping the brakes on some of these expansions. So what's been the spillover effect? Which countries have benefited the most from the reshuffling of hash rate in Latin America? And can you give us some perspective for just how much hash rate is moving to places like Argentina and Brazil?
Yeah. So you mentioned Andy. For those that don't know, that's like a governmental institution that provides energy, right? So it's nationalized there. So Andy has I think it's 98% of all the power they provide in Paraguay. There's one private entity, but other than that, it's mostly Andy. So they have a big role to play there. I did quite some, or I was involved quite a bit in Paraguay, especially in 22, early 23. It was the end of 22 when the new administration came in, and in Paraguay there were quite some blackouts caused by mining, and I mean, Paraguay has a lot of power because they have the second biggest dam in the world, which is located in Iguazu. So it's called the Itaipu Dam, which produces 14 gigawatts, of which 7 gigawatts is owned by Paraguay and then 7 by Brazil. So Paraguay has a lot of power. They also have other hydro dams, but they're relatively small country. They have around 6 million residents, and then the people that live there don't have the biggest means, let's say, so they don't consume as much energy as maybe people in the States do. And Paraguay being landlocked, makes it hard for Paraguay to attract other types of industry. So mining is a big opportunity for Paraguay to monetize that power that they produce and that they sell to Brazil for a big part at cost. The new administration came in. They had to do something about these blackouts because they were impacting local communities. And these blackouts were mainly caused by illegal miners, right? So they either steal electricity or they bribe an official at Andy to get access to power for a low price. But there's no grid studies being done, so sometimes they tap onto a substation that doesn't have the capacity, and it leads to blackouts. So they started cracking down on these illegal miners, which is a good thing for the legal miners, right? Like Bitfarms. What you saw that as a second step, they started regulating more the legal mining activities. And first they introduced a rate hike or a new rate, a special crypto mining rate for those that would obtain a new power contract. And then later last year, they decided to increase also for certain existing power contracts. And obviously that has a big impact for the miners there. And the bigger miners, they also came together and started lobbying the state. But it's that uncertainty that makes miners explore other parts in the region. And I have to say, like it's the title of this paragraph is like that it drives miners to Argentina and Brazil. So I would say it's in that process of driving. Let's say it's not that because of the rate hike everybody just drops everything and moves out, because that 200 megawatt data center that Bitfarms is building out, it's not that you stop that construction and just move out to the next country. And many of these bigger entities in Paraguay, they invested a lot on the high tension side. So they installed substations and big transformers and worked on the network in order to be able to mine there. So there's just a lot of friction between these miners. But you see that some bigger players that are active in Paraguay, they are engaging with new contracts in Brazil, for example, and they are not necessarily looking to speed up their scaling, let's say, in Paraguay. Interesting, maybe rumor or like a gossip. Hive did sign a contract last year in Paraguay, and other miners were not that happy with it, because they are paying a higher fee than the other miners, which puts the existing miners in a bad spot, because they were like lobbying quite severely for maintaining the rates that they have agreed upon. But in Brazil, for example, there's a lot of off-grid opportunities. On-grid, it's really difficult because the rates are just too high. So most of the miners are exploring off-grid, either hydropower or stranded gas. In Argentina, it's mostly gas, that natural gas or associated gas or flared gas, as you call it in the States, that's being explored. There's no huge sites yet up in Brazil and Argentina. Bitfarms does have like a relatively good sized site in Rio Cuarto in Córdoba, Argentina. But other than that, it's mostly smaller operations. If you have a 10 plus megawatt site, then it's already quite significant. I think the biggest challenge for Argentina and Brazil, and that's something that they need to work on, and that we've been working on with miners also, is the importation tax. So that's quite high both in Brazil and Argentina, there's certain workarounds that are being explored, like importing machines in parts, and then how do you say it? Not manufacture, but
assemble.
Assemble. Sorry, the word escaped my mind. Assemble locally, and thereby getting a tax break. So I think this year is going to be more a year of Argentina and Brazil than last year, but definitely last year is when these seeds were planted. And if you look at Argentina, like with the new administration here with Milei, things are looking quite positive. The business environment is really improving, and they even are rolling out plans to build a nuclear power plant to support AI, high performance compute data centers. So there's a very much open mind, and you see that they're looking at ways to monetize all the resources that are out here in the south.
Yeah, I was going to ask actually about whether or not miners are bullish on Milei's administration, whether or not they think maybe those taxes for imports would be slashed. I don't know if you've heard anything about that.
Yeah, so they are working on that to improve that. But I think in general, with Milei, what he says, he does. So it's what you see is what you get. So I think being able to build on what is being said is already a huge improvement here in Latin America, because usually politicians in South America, they say a lot during election years, but then what happens after is not always what they've been promoting during the election year. So Millet has really been working nonstop and implementing a lot of regulation. And you see a lot of positive developments. There's gas and oil and gas concessions that are being sold to private parties. They're working on nationalizing the airport. There's certain banks that are being privatized. There's certain banks that are being privatized. So I think it's moving into the right direction. And the inflation has come down here quite a bit, which is positive for most people.
So I want to jump to the public miner section,
Yeah.
so we can get into the meat of some of that. I think a lot of our listeners will be curious about some of y'all's findings for this. I want to focus first on the IPO section that you did, and specifically some of these IPOs that are pending, maybe didn't come to fruition. Like there's one, the GDA one, that has been long anticipated, and we did not see that culminate last year. Do you have any insights? And first, can you give a quick rundown of the pending IPOs that you discuss and some reasons why some of these may or may not have actually broken through last year?
Yeah.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
There were successful IPOs, obviously, which was Grid at the beginning of the year, who then later got acquired, right? And Bitfufu also had an IPO in the first quarter. And then there was a relisting of Core Scientific. I think most of the listeners will know about that they went bankrupt, and they were relisted, and I think with the partnership they created with CoreWeave, managed to get out quite on a positive note. Cathedra also resumed trading after a successful merger with Kungsleden. I don't know how you pronounce it, but I think it's Kungsleden. And then we had the highly anticipated IPO of Swan, right? Like Swan came out of nothing with a huge fleet, and then it appeared to be more complex on the background, and they ceased their mining operations, and in the end shelved their IPO plans. Then as pending IPO updates, Cindy listed Northern Data. I think, and then Genesis Digital, indeed. And then I think what you guys covered very well was the Chinese automotive service provider Cango that came out and became a public miner next to their auto service business.
Yeah, that was a dark horse for sure, and one that we're going to be keeping our eyes on. You know, they've got another deal for 18 exahashes that should close in March at the latest. They broke onto the scene after purchasing 32 exahashes worth from Bitmain. And an interesting trend, just to kind of highlight this for a second, we're seeing Bitmain kind of splinter off some of its hash rate to some of these proxies. You know, they're not directly involved with Bitmain, at least in the sense that, you know, they're not considered subsidiaries, but, you know, there's definitely some deal structuring here, and potentially, you know, some ownership within the Bitmain C-suite on some of these companies. And the other one that comes to mind is BitFuFu, which just purchased
Yeah.
80K ASICs
Yeah.
from Bitmain at a pretty high premium. It was like $20 per terahash. So I think that'll be interesting to keep an eye on this year, especially with regards to potentially some regulatory issues as we see, SoftGo enter the scope of the United States government. That's a chip manufacturing company that basically supplied chips to Huawei, which is on the U.S. sanctions list. And SoftGo shares a co-founder and co-CEO in McCree Zand with Bitmain. So
Yeah.
just a little tidbit there. It'll
Yeah.
be,
But if you look at BitFuFu, they have a big footprint in Ethiopia, and also they're mining in Paraguay. I think in general, if you look at Ethiopia, for example, or Paraguay, or more these riskier markets, let's say, or that are perceived riskier by Western companies, there you see the Chinese and Russians entering quite a full force, and they are not too scared to invest in Africa and Latin America. And yeah, many of at least the private players, they also have an interest in getting their money out of China and investing it elsewhere. And I think mining for many Chinese people is an excellent way to deploy funds abroad.
Let's touch on Ethiopia for a second here. I think that's a good point that these Chinese companies have a higher risk appetite. They tend to have this kind of move fast and break things and then worry about it later when they move into new jurisdictions. Do you think that Ethiopia will be a stable jurisdiction for Bitcoin miners going forward from your research? Because it seems like we see this story play over again and again. Paraguay is kind of a good example. And it's not unstable in the sense that miners are worried about being banned or having their machines requisitioned by the state. But, we've seen an increase in their electricity rate. We've seen this time and time again with either electricity rate hikes or taxes that are levied kind of at the 11th hour in places like Kazakhstan. Do you think that Ethiopia will be a positive place for miners, or do you think that there might be something lurking around the corner that will make the jurisdiction less attractive?
Well, I always think that those types of markets are riskier, and I think if you cannot obtain a lower electricity price compared to the states, then it doesn't make sense to move into these riskier markets. I do think, from what I've seen, being based in Latin America, not in Africa, but from what I've seen is that they've been quite welcoming to miners, and also the money the state is making and the people making from the mining industry is quite significant. But yeah, you can always have a change in administration, and then pressure from the people to do something with mining or about mining, which can impact the rules of that are at play. If you look at Paraguay, for example, there's also a lot of government officials that are mining themselves. So I don't know to what extent that's the case in Ethiopia, but there's not only foreign investors that are having a stake in the industry. So these deeper ties, let's say, that are maybe not shown to people that don't live there. They might be at play as well at a certain point. And maybe coming back to the money it's making for these countries, like on the import side, like many look at how much money is being made on the power that's being sold. But I also think on the importation side, there's quite a nice income for these countries that they make when these machines enter the country.
So bouncing back to public miners really quickly, as much as you can answer this, because I know that your co-writer took the lead on these sections, but with regards to the mergers and acquisitions section, you did a great overview of some of the biggest deals that we saw from public miners over the year. Were there any deals that stuck out or stood out to you in particular that you think were kind of more positive than the others for these companies that were acquiring others?
More positive. Like when you started the question, I thought of Riot, right? Like them trying to acquire Bitfarms, which was quite a nice soap opera. That came to mind, but it's not necessarily positive. I think it wasn't the most cost efficient for both parties. I think what can be highlighted, or what I found very interesting and what I've been following quite closely, is PDUs acquisition of Deciwi miner, and them starting to develop the seal miners. They published this technology roadmap for the seal miner, and they've been complying quite well with the timelines, and what is coming out is quite promising. So I think that's an interesting play that you haven't seen with the other popcos. And I also think it's interesting because Bitmain is so dominant in the industry, so having more developments going on the ASIC level side is a positive. And I think what's interesting to see also is that they've been deploying their own miners, but they have this approach, like if the market picks up, then they have this flexibility to either access relatively cheap hardware or benefit from the elevated prices and sell hardware to third parties. But up to now, it's mostly been deployed for their self-mining fleets. So I think if something stood out, I think it's that development that they've been pushing the seal miner development very much.
Yeah, seal miner definitely one to keep an eye on. Okay, I want to dive into your predictions for 2025. Which of the 7 predictions at the end of this are you the most confident on? And I just want to go through them really quickly for our listeners here. Network hash rate surpasses 1 zeta hash. BTC needs to exceed 200K for hash price to return to pre-halving levels. Price outpacing difficulty adjustments. Launch a first 1 petahash ASIC miner. That's an interesting one. First ASICs to reach single-digit efficiency. The S19 will make an S9 style comeback, and wider adoption of the Bitcoin treasury strategy. So if you could pick 3 of those that you're most confident in, could you break them down for us, your reasoning?
Yeah, sure. I think network hash rate surpassing a zettahash is not a very bold prediction, right? Like in 2024, 292 exahashes were added to the network. We started 1st of January at 807. So if you add 292 exahashes, like if we deploy the same amount of computing power as we did in 2024, then we'll be at 1099 exahashes. If you look at the average of the past 2 years, so 2023 it was 250, 2024 292, so that average of 271. If you take that average, we're also surpassing the zettahash. If you take the percentage growth we saw in 2024, you also pass the zettahash. So that's a various way to project network hash rate, and it always seems to be surpassing the zettahash. So I think that's one that's quite it's not too bold, let's say. It's not a guarantee, obviously, but from 807 to 1,000 exahashes is not a huge step.
Yeah, 100%. I think that's probably one of the more sure ones. Any of these others that you feel extremely confident about?
Well, yeah, that's the second one I had, that Bitcoin needs to exceed 200K for hash price to return to pre-halving levels. Yeah, more than a prediction, it's a projection, let's say. So I looked at the average month-over-month difficulty adjustment of the past 2 years, and that has been 3.15%. And then if you project it out to the coming 6, 12, and 18 months, assuming that transaction fees remain very low as they are now. Obviously, with these projects that we've seen in the past, it's very hard to predict when transaction fees might spike unless you're very much involved in these projects. But if taking that projection, you can see that in 6 months we would need to be at $115,000 Bitcoin in order to maintain current hash price, which is around $55 per petahash per day. And in 12 months, then Bitcoin needs to be at 140, and in 18 months, 168. If we want to go back to the pre-halving level, so not counting that spike that we discussed earlier, a few days before that, we were around $100 per petahash per day. If we want to return to that level in 6 months, then Bitcoin needs to be at $209,000. And in 12 months, it needs to be at over 250,000, and in 18 months, over 300,000. And I know there's a lot of bulls in this space, but I think, that might be a challenge to go back to that pre-halving hash price level, while in the previous halving we managed to do so within 6 months.
And for a third one, what would you say is your third most, likely prediction here?
Yeah, it can it can be either the price outpacing difficulty adjustments. That's what we saw in the last quarter. So difficulty rose 24.2%, while price was surging 56%. If that happens, then obviously for miners the revenue goes up. Up till now, Bitcoin has been rhyming its price action over the past few cycles quite a bit. So I expect a bullish year still this year. And if that's the case, Bitcoin might start running at a faster pace, then miners can build out new sites and deploy new machines. So I think that one is also quite likely to happen. I think also the wider adoption of Bitcoin Treasury strategy might be quite a safe bet, I think. I think it's if price starts rising, then these miners that are adopting that MicroStrategy playbook, they might benefit from that strategy, and it might trigger other miners to adopt it.
So going back to the price and difficulty one, you generally expect 2024 to be perhaps a better year for hash price than it was in the second half, 2025 to be a better year for hash price than it was in the second half of 2024 following the halvings fallout?
Sorry, what was the question?
So do you expect 2025 to be a better year for hash price than, let's say, the second half of 2024?
Yeah, I do think so. Although the last quarter, we were crawling up above the $60 per petahash per day, which was positive, but then we fell back below, unfortunately. That $60 per petahash per day is quite a line in the sand for many miners, especially those that have machines around 30 joules per terahash. And if you look at the average network efficiency, that's around 28 joules per terahash. So that $60 line is going to be important. But yeah, I think this is my third cycle. I haven't seen Bitcoin acting much different than previous cycles. So I expect to have a bullish year for Bitcoin. And that would mean that at a certain point, miners cannot keep up with the rate at which price is rising.